Good evening, ladies and gentlemen. On behalf of CFA Society Sri Lanka, I would like to welcome you all for our webinar on embracing technology to shape the capital market of the future, organized in collaboration with EY. Our main objective of having this webinar was that we live in an era of disruption, where the progress of digital technology is transforming our economies, the way we live, the work, and operate our businesses at a rapid pace. From a capital market perspective, we see unprecedented technological progress that give us the opportunity to boost the flexibility, scale efficiencies, and reduce complexity in our market operate. To unlock opportunities, the leaders in our industry need to embrace the technologies that have power to transform the capital markets ecosystem for the future. Keeping this in mind, we organized this webinar today, and we are very pleased that we have an eminent panel of speakers who will shed the light on the subject matter. Ladies and gentlemen, with that note, it is my pleasure to invite Aruna Pereira, Vice President of CFA Society, Sri Lanka, to formally welcome you. Aruna, over to you.
Thank you, Aruna. I would like to welcome all of you to this session. And the session is Embracing Technology to Shape the Capital Market of the Future. And as Aruna always correctly pointed out, we have been, now technology is becoming a vital part of our life. Probably 1980s, it might have started with the computers, then it went to internet, then probably smartphones and artificial intelligence, and now everything is technology based. And one of the key skills that people talk about is technology or digital skills, to make their workforce digitally enabled. And I think the COVID-19 pandemic actually have increased the speed of transformation into technology or embracement of the technology. With that background, I think this is one of the most important and timely topic to have a webinar on. To give a little bit of introduction to CFA Society Sri Lanka, we are celebrating 20th year this year. And we have roughly 250 members in Sri Lanka and 500 candidates. And CFA is a qualification that is relevant to investment and finance professionals. Most of the people do CFA qualification after completing their first qualification, either professionally or academically. And there's another path also where you can where you can obtain the CFA qualification after completing 4 years of experience and the relevant exams. I would like to thank our speakers for taking time to share experience with us on this timely topic. So thank you again, Mr. Varun Mittal, Mr. Naresh Abhesekar, and Mr. Rajiv Bandaranayaka. And I would also like to thank our sponsors. To remind our sponsors for this session, our knowledge partner is EY, and our platinum sponsor is Colombo Stock Exchange, and Equity and Cal are our silver sponsors. I would also like to thank Daily FT, our print media partner, TextWave, our text messaging partner. Also, I would like to remind the people who are supporting us with this webinar, that is ACCA, BCS, CIMA, FITIS, ISACA, SLASCOM, and NCC. Thank you very much. Let's, without taking too much time for introduction, let's move on to the topic. I would like to hand over the session to Aruna Alvis to start the session and introduce the moderator.
So thank you very much, Aruna, for those introductory remarks. Now it is my pleasure to introduce our moderator for the day. It is none other than Chamara Gunatilaka, Director of CFA Society Sri Lanka and Director Specialized Solution at Equity Knowledge Partners. So Chamara, over to you. Please welcome Chamara Gunatilaka.
Thank you, Aruna. Firstly, I'd like to thank the panelists for taking time today. I know everybody's pretty busy, especially these days. So, I mean, in terms of this webinar, I think there are a couple of things which I'd like to talk about in terms of what you'll be getting from this. I mean, one of the main things that you can expect is to understand what are the main trends going on when it comes to fintech in the capital market space. And also, very importantly, to understand what's going on with fintech in Sri Lanka as well. We have Varun, who will talk about the global capital market perspectives, and he's got extensive experience in the fintech space. We have Naren and we have Rajiva, who will talk about the local context, which will be very interesting for us as well. So this can vary quite a bit. I mean, we talk about fintech these days. I mean, we can talk about the Uberization of capital markets to Bitcoin, Ethereum, and the newest cryptocurrencies. And also, importantly, talking about some local priorities like broad-basing, the recipients and the value chain of the capital markets in Sri Lanka. So just to start things off, I'd like to introduce all three panelists and talk a bit about them a bit. We have Varun Mittal, who's based out of Singapore. Thank you, Varun, for joining us. Varun runs a fintech practice for EY for emerging markets globally. He's authored many books and articles in the fintech space and is also well known in the Singapore fintech circles. He's co-founder of the Singapore Fintech Association and also the Asian Fintech Network. He'll be providing us kind of the global backdrop. We have Naresh Abeysekara. Naresh is the SEC Commission member and the chairman of the SEC-CSE Joint Digitalization Committee. This digitalization committee has played an important part of a lot of the convenience we see, especially in today's challenging times, on doing capital markets transactions while we can stay at home. So we'll talk about this a bit later on. He's also the founder of a firm called Securities, and he's also CEO. He, in a former lifetime, he was group CFO for Millennium IT, a fully owned subsidiary of the London Stock Exchange Group, which is not strange to all of us. We have Rajiva Bandaranayake, Chief Executive Officer of the London Stock Exchange. He has played a key role in, very senior positions in melding the capital market space in Sri Lanka over the last 25 years, and also been CEO of the two listed companies in previous roles. So welcome, everybody. So I'd like to maybe start with Varun. Varun, maybe you can talk a bit about the global areas of focus that you see in capital market technology across, let it be regulation, broad basing, the network, cutting out middlemen. And I know when it comes to digitalization, you're talking about disruption at the same time and also value creation. Maybe you can talk a bit about your perspectives that you see, and maybe we can start from there.
Absolutely. So what has happened in past 4-5 years is the consumers have access to internet and their devices are very powerful. So previously, the only way for financial institutions to reach the customer was through the branches. Now everybody's carrying 10 times the more powerful instrument than a branch in their pockets. And what that has done is that has reduced the power of the traditional corner of the street branch for financial institutions. It has reduced that cost and reduced that barrier, because in the rural villages, far-flung areas, you can't have branches, but you can still have the smartphone. So that democratization of access by virtue of internet as well as smartphones becoming cheap has been one. The other part has been the commoditizing of the infrastructure layer. So when I say commoditizing of the infrastructure layer, the way I would look at is now payments, for example, can be enabled. So payment became a feature. Every e-commerce app, every ride-hailing app started to embed payments inside them. And it became very easy for anybody to add it to their applications. Now that is happening to lending, because the building blocks in Sri Lanka also, now you have first peer-to-peer payment app without charging a fees to the consumer in something like Paymaster. So you have those kind of building blocks which are becoming very easy for people to access, for people to build solutions on. And because now so the premise is why internet became so big? Because everybody could make their own website. Why the app stores and smartphone became so big? Because everybody could make their own app. Of course, aligning to the guidelines of the app store. Similarly, what we are seeing is the democratization of financial services, where the building blocks are democratized and which has unleashed an era of creating new products and solutions. So people or organizations, which I would call as rent seekers, people who were charging you 2% entry load, 2% exit load for an investment product and 3% annual fees, now they have to compete with an ETF product. People who were mis-selling because the consumer couldn't compare the prices, that has become less. In insurance, for example, 15 to 25% of the premium a consumer was paying was going to the agents. And if that cost savings can be there and given to the consumer in their hand to create more value in their lives, that has impacted and created a new world per se from that perspective. So just to summarize, it's internet and smartphones as the primary driver and democratization of building blocks as the second thing, which has created a flat ground for next 100,000 new fintech innovations to bloom.
So essentially, apart from the democratization, I mean, we have essentially the building blocks in place. You said that people have more computing power in their hands, and there's essentially a culture of democratization of what they want to do. Younger people, they don't always, they're more risk loving. They might not always go to a bank to do a financial transaction. They're comfortable with apps. But what do you think are the catalysts that would really need to fall into place for more innovation to take place, more financial products to take place? Is it going to be demand led, or is it going to be more Apple Pay on technology devices, things like that?
See, the way I would say is demand is already there. The consumer wants financial services right here, right now, immediately. So the demand is already there. There is no doubt, I would say, about the demand from that perspective. The demand is already there. The supply is coming, and I would say one of the building blocks which can come, which would be really helpful from that perspective, is regulators opening up that field, regulators opening up those requirements. So for example, today in most markets in Southeast Asia or Sri Lanka, ETFs are not formally regulated. There is not a formal license. So everybody is doing mutual funds. So if the regulators come proactively and say, here's a governance regime, because right now everybody is enjoying, so nobody wants to break the party. So the regulators proactively take suo moto action that these are pro-consumer interest motives. Like in Europe, for example, when MiFID happened, they clearly said that you need to clearly show that this is the cost for a device, this is the cost for the product. So if the regulators come forward saying transparency is not a privilege, transparency is a right. Unbundling of services and unbundling of product is a right, not a privilege. So today regulators in most places are saying, when something goes wrong, then I will come in. But if the regulator comes and say, this is not in the best interest of customers, and I will come in. So I would say some level of regulatory activism where the regulators look for the long-term interest of consumers, that is something which will be the next generation of democratization pillar.
When it comes to emerging markets and developed markets, where do you, I mean, you must be exposed to a lot of, we talk about emerging market fintech.
Yes.
What are the areas that are hot right now? I mean, are we looking at faster exchanges? Are we looking at
see the way
currency?
I look at it is this. Usually payments is the first one, because payments, the effect you can see immediately. So suddenly your payment will become faster, cheaper, you can see it immediately, experience it immediately. So payments is the first, always. Lending is the second, because medium-term impact. Wealth is the third, which is slightly longer term, but you can start to see the impact. And insurance is the last, because you need to see some bad moment and how the insurer or the fintech who is offering that service behaved in that not so nice moment. That's the long. So that's usually the trend. I would say Sri Lanka is today in the payments and some level of lending evolution journey, and with God blessings, I believe hopefully next couple of years it can fast track and it probably can jumpstart to get the wealth and insurance to also kickstart fast enough.
Is there any interesting examples that come to mind when you talk about this payments lending area? I mean, because it's Sri Lanka's in it, and if you
So I'll give an example of a Sri Lankan fintech to give into context. So there is a Sri Lankan fintech called Paymaster. What they are allowing people is to take a small loan to top up their phone. So small people, people who do not have enough money, they want to take a small loan for 5 days, 3 days, 10 days to top up their phone. And because the business is happening on phone and they get their payment after 10 days from the employer. So that's a company which is going after saying, I will simplify the telco top-ups. I will give free peer-to-peer payment. So I can pay to Chamara for settling the coffee bill, and I will give small loans. So there are companies in Sri Lanka who are actually now trying to build on top of the infrastructure, because now recently you had Lanka Pay open their national payment switch where the fintechs do not need to rely on the international card schemes, and that technically democratizes the ability for fintechs to build a solution on that, because normally fintechs have to pay I would say 350 to 500 Sri Lankan rupiah for some of these transaction authentication and everything. By using Lanka Pay, they can do it at less than 30, 40 Sri Lankan rupiah. And that's a central bank governed infrastructure.
Okay. So this is very interesting for us because of some of the conversations that Naresh and Rajiv were talking about is some of the infrastructure that Sri Lanka has accelerated towards in terms of authenticating people in the online space. So this definitely opens up the possibility for more innovation and also a quick trust in the system. I mean, if you look at in the COVID space, people had to enter their personal details for vaccination registries.
Yeah.
And now ICTA has moved ahead, and they have, I believe, Naresh, I might be wrong on this, but there are other databases that the government has access to verify people's details and, kind of validate everybody on this and on the whole value chain. So this is something that I guess the infrastructure has to be there to start off with. So with some
See, the way I look at is this: it's not always the government needs to build the infra. Sometimes what happens is the private companies can come together to build the national infrastructure, and then that becomes a building block. So it should not always be a burden for the government to build it. I would say it is also a factor of the public-private partnership to come together to solve this, because it's in everybody's interest to do it. It's not just the responsibility of the government.
That's a good point. And also we are, like, sometimes when talking about innovation, everybody looks towards the tech companies and the smaller firms that are kind of considered the innovative ones. Yeah. But is that always the case? I mean, there are enough of large telcos, banks. There's been a series of banks that have introduced their own payment systems as well in the local market. So I think innovation is happening at the institutional level as well as the smaller, startup level. Then at the same time, we have just basic demand, like globally, sometimes institutional investors reporting requirements for fintech is much higher. That kind of starts off at the initial stage, I would say at the reporting stage before we go into payments. And there's a lot of technology that drops into that. How do you think this will kind of pan out? And if you were to say, are there 2 or 3 very key points that have to fall into place for payments to start, for lending to start? Is there anything that you can generalize?
If KYC can be rationalized, because that is something which a government needs to agree that they will acknowledge this as a fair way of KYC. If that can be democratized, then that can take one stumbling block. So for example, in India, when Aadhaar happened, so the government came in and said, okay, we will solve the problem of who you are for everybody. And no matter big company, small company, solve for everybody, done. So KYC, because small companies can struggle a lot on this AML, terrorist financing, and Sri Lanka had during the war, there were challenges around financing and tracking those transactions. So if that can be solved, then technically you have taken one block away. Second is access to the clearing switch. If you can provide direct or indirect switch, then you can remove the counterparty risks and you can ensure the settlement is solved. So solve the KYC, solve the settlement. If you can solve these two, then trust the innovation, the power of dreams of young people to create solutions. The magic which those dreams will create will be beautiful.
That's interesting. I think Naresh and Rajiva might have a lot of interesting to say about this development that has taken place. So I believe that the KYC development that has happened to the second session. You also spoke about asset classes. Now, you spoke about ETFs. Are there any other fintech-related new asset classes that you think will be interesting for us?
See, one thing which is happening these days is people are doing micro investments in gold and silver, like precious metals. So, and micro investing in those, or micro investing for retirement funds in precious metals, and creating like pension funds, which, so for example, in India, for example, there is a product where people can invest micro pension through their WhatsApp account. So WhatsApp has a product in collaboration with fintechs where you can start to save 10 Indian rupees, 20 Indian rupees every week for the long term. So the idea of making sachet economy. So FMCG companies were the biggest pioneers of selling the British and the American shampoos in the 5 rupee, 10 rupee pouches in emerging markets like Sri Lanka. So why can't we make a sachet financial services? Why can't we make savings to be like that? Why can't we make lending, insurance to be like that, where it is available in bite size? And that is something which can create a lot of opportunities. And once people start to get comfortable, then you can start to get scale. Because once the scale comes in, then the minimum costs are able to be adhered, because there is some fixed cost which is required to do this. And that cost can be taken on if we do it like this.
All interesting things. Talking about a bit more on the hardcore tech, not when it's hardcore, but something that's more in the mainstream these days is this whole Bitcoin, Ethereum, blockchain technology. Where do you think that is? I mean, I'm talking about this because prices of those asset classes have, it's been very volatile. Some people say those are bubbles, and volatility of an asset class like that, a fintech-related bubbles, can sometimes throw away confidence in the fintech space. What are your thoughts about this?
So the way I look at it is this, right? This blockchain and Bitcoin and everything, those are, I would say, complex for an individual retail investor. Those are complex from an individual retail investors from that perspective, because a lot of these consumers do not understand the complexity of these products. So the way I look at it is this: there are no right or wrong in these products. The premise is, do people understand? And my view is there needs to be enough awareness about that, because imagine somebody bought at 64, right now is 35, 37. People are concerned because they don't understand what it is. So there needs to be financial literacy and financial awareness around those ones to ensure that they can do that properly and they know what they're buying. The problem is that.
So on top of that, what do you think what is the view on regulation globally for these sort of entities? And sometimes regulation is something people rely on. At the same time, regulation is something that people don't like because of the increased
So
cost
it depends,
burdens.
right? It's tough to regulate, right? For example, it is not a security. So it's a question of if I start to control that how much chicken Chamara can buy and how much goats Chamara can buy and how much wool you can buy. Bitcoin is like a commodity from that perspective. It's your view. You will be like, it's my money. What am I doing? It's my call. Who are you to tell me? So the premise is the regulation also comes from a perspective. How do you regulate it as? Are you going to regulate it as a commodity? Are you going to regulate it as a security? And there are emerging pieces. So a lot of countries are trying to regulate it as a security. Some are regulating it as a commodity. And they are saying that, okay, only retail investors below this cannot do this and stuff. Because they're trying to protect the consumers from that perspective. Because to be honest, there is one Bitcoin, but there are enough of these dog coin, this monkey coin, and all of the other random coins which are not the most clean and safe for the consumer. And which is why sometimes there needs to be a regulatory intervention to ensure the consumer is protected, because the consumers are not the most sophisticated in a lot of these places, and they can be swayed or misguided about some of this.
That's something that everybody has to be very mindful of. And as you said, though, it's to a great extent, a lot of these things are buyer beware. So
Exactly.
Yeah. Okay. So thank you, Varun. I think maybe I'd like to move on to Naresh to talk a bit about some of the Sri Lankan context. And I think Varun touched upon a lot of interesting things that are very relevant to what we're going to talk about with later on in terms of creating infrastructure that has a trust component, like the KYC factor. I mean, some things like this, they have to be put in place centrally. It's something that the market doesn't really provide for it that easily. And if the market does provide free, there are trust implications that prevent it from moving on forward. So maybe Naresh, maybe you can talk about some of the recent developments that have taken place. I know we've gone through an unprecedented time where we've had to deal with working from home, and this is something that Sri Lanka hasn't been too used to, especially our capital market. There's been a lot of investment, a lot of hard work that has gone into putting a lot of, on one side, long-term infrastructure in place, and I'm sure a lot of band-aids in place to hold things together. Now, you wear a hat of, chairman of the digitalization committee as well. So maybe you can talk a bit about how things have changed. And one thing that is interesting that it wasn't known to me, was the level of maturity in our own capital market infrastructure. So I think Naresh will talk a bit about that as well. Naresh, over to you.
Hi, thank you, Chamar, and thank you for having me today. Sri Lanka is one of those stories where adversity literally drove innovation. And with the very first lockdown in March, the market couldn't operate. And when as an SEC, we went through the touch points, we realized that there are a lot of manual touch points. And so soon after that, the chairman of the SEC set up this joint committee comprising of CSE members, board members of SEC, CSE board, and management teams. So what this team did was they looked at every single touch point of the investor, of the broker, of the exchange, and literally draw up a plan to automate it. At that time, we didn't even have online account creation or eKYC. It was it was an exchange that was unable to operate. So within 3 months, what we did was converted that exchange, digital transformed the exchange and all the intermediaries, that's the 26 or 30 stockbrokers, to full electronic trading, settlement, online account creation, eKYC, all of that. So how we solved the eKYC problem was, during these 3 months, we literally built an interface to the Department of Register of Persons. And with the digital onboarding process in the app, right, it'll take your selfies, all of that, put your name details, then it'll send that information to CSC. CSC will use robotic automation basically to talk to the database, extract the information, do a checking and distribute it to the brokers. So this process literally transformed for the first time in Sri Lanka, and I think a lot of countries even have not adopted eKYC, where digital onboarding with a right eKYC was brought in, because you have a pictorial verification, you have the verification of your name and all the details. Apart from that, what we did was we used this as an opportunity to develop a efficient and resilient capital market to drive also digital inclusion and financial inclusivity. So we identified that there are about probably 21 million or whatever smartphone users in the country. We used that as a base, right? And adopted a mobile first strategy to bring all the information that the investor needs to improve the decision-making ability, investment ability, all of that into the palm of his hand. Apart from the fact that it has everything on the debt, we optimized the entire solution to bring everything. So whether he needs research reports, market data, easy access, easy secure access through biometrics, then macroeconomic insights connecting to probably Treasury puts in reports, central bank puts in reports, then the independent research arms put in reports. So all the information, including the public listed company press releases today, are on this app. So even if a public listed company puts press release on the app, that comes on board. Also, the digital content was further enhanced with Stock Pulse, where even the CEO interviews was brought in. So this single app basically was brought in to bring in the information to the palm of the hand. On the investor's point of view, the app also, on the investment, the listed company's point of view, the app also brought in the annual reports, the notifications. So if you want, if a listed company publishes its financials, today you got a notification coming on the app. Engagement with the investor was enhanced, where you had in-app notifications, SMS alerts, in-app messaging coming in, whether then the annual report is released, that notification comes in, he clicks and checks it. The listed company puts a circular out, you click it, and up to the PDF level, scan copy, you can view that information, right? So it literally took the geographical borders out of Sri Lanka, where even if you're a foreign investor, you literally can open an account and open your CDS account, start trading. So this brought down the time. Earlier, it was about, the manual process was about 10 days. And today it's close to 1 day, right? So there's a huge change. And so literally the full market within 3 months was transformed for full electronic trading, including testing the brokers and all of that. So we are pretty much operating today. I mean, during the second lockdown came, Chamari, a couple of months later, right? In 4 months after the first one. And when it came to second lockdown, in August, when it came to second lockdown, CSC was operating without a single day of closure on full electronic trading, compared with any market comparable overseas. We've developed technology for 40 plus capital markets around the world. I mean, in my previous life, including London, Italy, Hong Kong, Canada, Singapore, whatever, full electronic trading was operation. So that was, I think that's where we are right now. And further on, we've enhanced the app to make it, to increase our investor engagement by making it one of Sri Lanka's first quadruple play mobile apps. So when I say quadruple play mobile apps, what we've done is the information is available in 4 forms. You can read the research reports, you can watch the videos, you can get a research report on voice form, and he can get it on AI form. So literally he's going in the vehicle, he puts his short codes, he has activated Siri and Google Assistant, and we have a CSC has its own virtual assistant called Investor. Ask Investor any question on the market, how my portfolio performed, or anything like that, that interaction comes in. So that is literally where we are on the digital space. And the results of this in less than 10 months was app probably is the fastest growing app in the country, 65,000 plus downloads in less than 10 months. Retail activity increased by almost 60%. The retail participation, serious account creation increased by 70%. And what is interesting is 83% of all serious account openings are less than the age of 40. So you're getting into that millennial investor group that previously you couldn't reach, and digital enablement, right, to go into province, and the provinces are coming. You're touching every Sri Lankan digitally, has brought in this growth.
That's interesting. I mean, that just to kind of reiterate some of the points you made. So what you're saying right now, we do, like Varun said, there is a KYC infrastructure in place, the KYC process that you spoke about. Then we have apps in place. That's 65,000 downloads in 10 months is quite a phenomenal number. And as you said, the age range, the age distribution on that show that a lot of younger people are, understandably just downloading the app and getting more involved in. That is also, I think, Rajiv, I mean, that's something that I think has been a priority of the stock exchange as well, into broad-based, capital market users essentially. So I think there's been a lot of training programs also on investor education that the CSE has done with the CFA as well. So all this has kind of helped build that ecosystem. And I guess, Naresh, that's my next question to you is, the ecosystem is always important because we need to have sometimes a single thrust in one area is a lovely idea, but it doesn't happen unless the stars are in the right place. But now we're seeing a bit of movement where the KYC is there, people have data that they can use. If there's a requirement for new tech companies to use this data and look at new investors, that is something that is a possibility. The inclusivity factor means that more people are looking at the stock exchange as an asset class for savings. So I guess all the brokers on this call would be also looking at how do they kind of make use of that opportunity. What are your comments about the ecosystem right now in place in Sri Lanka's context to really see more fintechs, making use of these catalysts in place?
You're talking about fintechs companies setting up, or
fintechs and people. I mean, the ecosystem in place, regulation, be it.
So I think from a regulatory perspective, let me first touch on the regulatory perspective. I mean, there's a new SEC Act coming out that will set the future of regulation, and the Act is technology neutral, right? When I say technology neutral, right, the regulation paves the way for innovation. Regulation is not going to tie your legs basically and not let you run. So the regulation has been, whether it's a digital asset class, which includes blockchain to crypto to, non-fungible tokens to whatever, right, has been laid. And I'll come into NFTs, why it's important later on. So the regulatory landscape has been set out. In terms of creating that investor mindset in the people of Sri Lanka, there are a few things we've done. With the digital phase alone, the digital education platforms have been laid down. So the YouTube channels, then YouTube channels for digital education, then TV programs, then road shows. All of that has been set out, as well as in 2023, which is the next education syllabus change, subject on capital market, investing, all of that is going to come in. So the platform, then the foundation has been laid to create this next generation of investors coming in to the fold. What literally we want to do by developing this market infrastructure is to drive a capital market based economy. So with phase 3 coming in now, I mean, we develop the technology to interact with the investor. He can view his portfolios, all of that. But the next phase is, right, bring in the wallet team to make the capital raising speed, right? Settlement of, as Varun also said, settlement of transactions, the capital raising speed, very efficient, right? So when the wallet comes in, we are looking at something like single day IPOs, right? Because what happens is that brings the market, creates a market infrastructure for an entrepreneur to raise capital, which directly drives innovation, right? So if you make knowledge and capital accessible and easy, right, then you have, I mean, you have patient capital, permanent capital coming into a system. You drive innovation in economy. So which is a broad equation that we want to drive. So the digital wallet per se will be a single digital interface. Even if you're an overseas investor, he can download literally any brokering house will be able to market that to any country, right? He clicks, downloads it. IIA account is automated, enters all the information once, right? A shared KYC process will work within the capital market ecosystem, right? He enters all the information once, it will work on a shared KYC basis, right? And he can switch asset classes and do whatever he wants and hold his money also in virtual account. So literally that's where we're heading. So this ecosystem will facilitate peer-to-peer lending, which is very fast, right? So you put e-subscriptions, the money is raised, it will directly do the auto reconciliation, go into the company that's raising capital or whatever. That is something that we want to drive to. I hope I answered your question, to drive this fintech into the capital market.
Fintech catalyst, maybe, because see, like it's like almost from what I'm hearing, there's a lot of kind of items that fall into place for a next stage of innovation to take place. But I think sometimes, I guess one of the points of this call is also everybody doesn't know that. Everybody doesn't know the level of infrastructure that we have in place, and what's going to happen in the next 1 or 2 years as well. The future development. But I mean, the fact that we are probably, if you compare us to, I mean, I might be wrong, Naresh, but I mean, if you compare us to other peers, even European markets, look at our stock exchange is actually probably one of the most developed around. We have all this eKYC infrastructure in place that is almost like a leapfrogging of technologies for us to be able to do transactions from home. All this has fallen into place, and if you look at kind of the development of where we are on the spectrum of low developed to high developed, we are probably on the higher side. Is that a correct observation?
Partly yes, Chamar. I mean, from a legacy, I would consider all capital markets today to around the world running legacy technology, right? And it's only now that some of our very own ex guys are actually reinventing asset classes across Europe, right, which is on a different footing. But when you compare most of the comparable exchanges, CSC's path is developing a next generation exchange, right, enabling fintech. But where we probably need to develop once we lay this infrastructure is driving intellectual capitalism through the capital market, right? Which a lot of you have the non-fungible asset tokens and all of that coming in. So if it's a music video, if it's anything creative, we need intellectual, creative, right? That has a valuation put, and that's basically becomes a tradable instrument, right? So for that, authenticity is what you need literally. A distribution ledger blockchain coming in. So apart from that, right, driving the intellectual capitalism, I think from capital raising to distribution, we are pretty much, I would right to say we are comparable or more. Definitely the wallet coming in. Yeah. Definitely the wallet coming in right? You have literally developed a market that has been based on the principles of growth hacking. If you take it, right? So when you look at growth hacking, it's like digital platforms used, how digital platforms are growing. So with the wallet integration coming in, definitely it'll be probably the only market around that has this type of fintech combined retail growth infrastructure in place.
What on in terms of now on in the digitalization process, I mean, where do we stand on next steps for Sri Lanka? I mean, what are the kind of current priorities that exist? Obviously, the wallet, concluding on the wallet might be one of them.
Yeah, I think phase 2 has, I think we launched phase 2 with few innovations. Investor came in, then CDS connectivity came in, then the AIS, the interaction between basically enhanced the interaction with the investor. All of that came in. So the next critical phase is literally to drive the wallet as a single digital interface for investing, right? And once that is in place and you lay the foundation for that infrastructure, whether you connect farmers, whether you create products around it, right? For any sector, it's easier. But get into that initially, it was like, okay, as Varun said, you see the without a KYC, you couldn't have got this far, right? So the toughest part was sorting the KYC problem. So once you solve the KYC problem, then you can create the wallet, you have shared KYC, right? So then you see, creating an ecosystem around it becomes easier, because then the growth level of technology, because your core technology is in place. So that would be a major component with regard to the speed of capital raising, right? Especially, see, make it one of the fastest capital raising destinations around, very fast capital raising from anywhere. So then literally the investor can be in Japan. You might have asset class that is in energy, right? A windmill or solar power that's in units. And you're basically transacting it, and you have the entry exit mechanisms through the boards that you have. So that is literally what we are looking at. And there are other few innovations where we are looking at using the CDS, right? The central depository system is one of the most powerful assets that the capital market has, right? So we are looking at how within the existing legal framework, right, and the regulation, how we can enhance this capability for greater empowerment of the CDS to build more futuristic products that will enable this capital raising aspect of this process.
So if I were to ask you, leaving your day job aside, if you had all the time and a whole bunch of resources you can put onto it, what are the kind of, if I would even say fintech ideas that's close to your heart? Is there something that you think that could really work? What would that be?
No, I mean, CSC is a place anyway close to our hearts, because I think we started off developing the first ATS. I think in my previous company, we started off by developing the ATS for CSC. I think Rajiv also was there in that time. And then we went on to be, and that company went on to be a global leader in capital markets, which was later acquired by. So I think I put 3 years or so a week on this, and that is adequate to drive the optimization of the capital market. But I don't think, I mean, putting any time when it's required is put in. So literally these plans doesn't change, Chamara, right? I think once the wallet comes in, if you can basically drive that, you see the trading mechanisms for the intellectual assets to come in, the digital asset classes is the next phase.
I mean, there's been, you're talking about, I think, non-tradable tokens or non-fungible tokens, NFTs,
yes,
which kind of essentially layer electronic signature on, I mean, layer asset class as an electronic signature, being it an image, being it a song, or being whatever. And that can be a asset that you can hold and resell onwards, and it becomes a tradable asset. I mean, these are all stuff that can definitely help in the, I hate to use the word, but the Uberization. And also to a great extent, reducing the number of layers of middlemen in the process. I mean, capital markets historically naturally had to have a middleman in between because of the efficiencies that it created. But now with all this in place, a lot of the value, we are talking about disruption in digital markets, as Varun said, payments, that's a big disruption because there are so many intermediaries you have to go through. You have to pay the credit card company, then the credit card company has to pay the settlement company, be it Visa or the larger networks, and then so on and so forth. But gradually now there are so many, just like this wallet concept, there are ways to directly connect a buyer and the seller, and there's no diseconomies of scale by doing that. The system in the infrastructure ensures that you get best price from both sides. So like you said, theoretically, if somebody had a wind farm or a solar power farm in some place and want to raise money, they don't have to go through an investment banking mechanism to look for investors. You have another avenue to essentially put your product out, break your value chain essentially, and sell parts of your value chain to the 65,000 people download the app and read about it and want to invest in that directly. So in the future, at some point, we'll be able to ask for a certain money within regulation and have people invest, let's say, the 1,000 rupees to 10 million rupees of value you want to put in as an investment, and then that will be aggregated and sent towards the wind power farm, something like that.
Exactly. So some of it will, with the wallet coming in, you will anyway bring peer-to-peer lending, crowdfunding, all of that. With the wallet, it will come in, right? So from a lending perspective, you're pretty much in the next 6 months, you're probably optimizing basically your value offering, right, with the available technologies, right, to its optimum state, right? So which means if Charmer wants to put 1,000 rupees to Sri Lanka's best public listed company, right, and lend to them, yes, he can. Right, and if you have an entry-exit board, you can enter exit, right, which we call a debt exchange, right? So CSE anyway has a debt exchange at the moment. It's about connecting the dots and connecting the infrastructure and making it work. So literally, that's the broader equation that I think we are trying to solve.
Thank you, Naresh. That is a lot of information that's of real interest, I think, to everybody on this. And one thing that I think is very important is to also understand where we are and where we have. I mean, the journey of the Colombo Stock Exchange, the Securities Exchange Commission, this whole digitalization part has been a very key part of how we manage this COVID situation as well. And that has been something that I think it's important that everybody knows. And the fact that a fair amount of the automation and technology and also the regulation of the new SEC Act that's being debated, all that kind of come into place to really create infrastructure for the future. So with that, I'd like to move on to Rajiva. Don't see. Hi, Rajiva. Rajiva, thank you for joining us. Rajiva, the first question I want to ask you is, kind of leaving technology aside, can you kind of talk about the priorities that exist for the Colombo Stock Exchange? And gradually we can work on the technology aspects of that. But what are your current key priorities from a big picture perspective?
Sure. So to begin with, Chamara, thank you for inviting us today, and also to CFS Society and ENY, the knowledge partner, for putting this session together. And judging by the participation and the heap of questions that are coming in, I think it's a very timely move. So congratulations for the good initiative that you have done. Moving away from technology, as you said, we have 4 focus areas, if I were to put it that way, and quite in line with some of the questions also that were asked. Product diversification, which Naresh also alluded to, is something that is very much on the cards. And we have about 6 or 7 products that we have planned out. Some have already been done, some are in the process of being launched, and yet others probably will get done next year. For example, one of those is the real estate investment trust. The rules have already been gazetted by the SEC, and we saw the tax reforms also being done, and it's only the stamp duty matter that has to be sorted out. So as we speak, I think there are a couple of promoters who are already talking to investment banks to see what kind of product they can come out, real estate product they can come out with. So that's one we feel attractive instrument that the market will have in the future, simply because real estate is something that Sri Lankans understand, and given the property boom is still on, we feel that that's something that will have traction and give a diversity to the product range at the exchange, because we have been traditionally kind of 1 or 2 product market with equity and a small debt market. So talking about debt, that's the second area where we have got the regulatory approval once again for the rules to set up a OTC market for repos for corporate debt, in order to hopefully stimulate some secondary trading, because generally corporate debt is held to maturity. But now we are setting the framework in place to enable secondary trading as well. And right now we are in the process of onboarding the primary dealers and some of the market participants as brokers who can do the intermediary role. So I think these are 2 products that we can see which will see the light of day sometime this year. A third product that we are currently discussing with banks is a goal-based paper product. And so discussions are on with the banks to set this product up. And again, the regulator in principle has given its approval for us to start setting up this product. So that's of course at a very preliminary stage, but we are doing quite a bit of work on that. The fourth area is, which we got approval recently, is a multi-currency listing for local companies. So to enable local companies to raise US dollar denominated debt and equity. More recently, on the 30th of July, the central bank formally issued the regulations after Monetary Board and Cabinet approval to enable local companies to borrow US dollar denominated capital. And we feel that there may be a few companies here who have dollar exposures who will opt for listing in Colombo as against a more expensive option of going overseas. So we feel there again, it's a fourth new product that we'll see materializing this year, because we just got the central bank approvals, and now it's a matter of setting up the rules, which we have currently started on. A fifth product, Chamara, is stock borrowing and lending. As you know, we spoke a lot about DVP, delivery versus payment, settlement system change that's going to come. So stock borrowing and lending is another product that is going to come in, along with regulated short selling. Somebody did ask a question about derivatives, whether we are going in for derivatives. Yes, we certainly have a plan on doing that, but we need to set the infrastructure right for derivatives. For example, one of the first derivative kind of products that can come is short selling, that people get a feel for what a derivative product can be. So you make money not only when the market goes up, but even in a falling market, you can still make money. So that concept will probably come in with this type of instrument, and stock borrowing and lending will be another instrument that will help short selling and under DVP environment as well. So in case of derivatives, since the question was asked, maybe I can handle it right now, that the infrastructure side of the legal framework, certain laws have to be changed, enable the setting up of a derivative, simply because you need to have an intermediary called a clearing corporation that is set up to guarantee transactions, to guarantee the security, delivery of security to the buyer, and then again, this organization will guarantee payment to the seller. So all that has to be set up. Along with that, there are certain regulations that have to come in. For example, finality of transactions, the bankruptcy laws have to be looked into. The concept of novation has to be brought into a legal system. So there are some preliminary work that has to be done, apart from the fact that I think a lot of education also would have to be done for derivatives, because it's a product that is probably than straight equity. So you need to have that knowledge base among the population or the investor base in order for us to go for that product. So yes, we are very keen to do that, but that may be a year or two away at least, at a minimum, in order for it to see if you're talking about time to market. Another product that we did do a lot of work on is mortgage-backed securities, and currently we are working on the mortgage-backed securities product, which we feel may be doable in the local context. So, Shamra, we have a suite of products that we are looking at purely with the intention of giving a wider range of asset classes for investors. And I think all of what we were talking about in terms of technology as an enabler. So we need to bring the products in so that this can see the full extent of the efforts of the digitalization as well. So that's one area, the product diversification. The second focus area is about increasing the breadth and the depth of the market. Depth in terms of liquidity. As you know, recently we saw the market liquidity increasing, which will make the entry and exit to the market easier and less expensive for an investor, be it a foreign investor or a local investor. If you look at a measurement that we use, turnover velocity, that is the turnover as a ratio, expressed as the ratio to market cap, was about 6% in 2019. It increased to 15% in 2020, and it has almost doubled. It's about 28% currently this year. So we see that the levels of liquidity has been increased, and that's one of our key focus areas. And if you look at three criteria that you can use, turnover velocity will be one. The daily turnover average, it was $10 million last year. It has almost doubled to $20 million on any given day, or translated into rupees, something like a 3.8 billion rupee turnover that we are doing. The third criteria in terms of transactions. Pre-2019, we were doing at a max about 5,000 transactions a day. Today, there's a five-fold increase. We are touching 25,000 transactions a day. So that's the kind of volume and increase in liquidity that we are seeing. So the second focus area in terms of the market is increasing the depth of the market. And the next to the breadth, I spoke about both breadth and depth. Breadth in terms of the primary market, more new issuances. And again, we have, I think, been successful in reactivating the primary market after a very long time. We have seen some successful share issues taking place today. And so far, I think about 7.5 billion in equity alone has been raised for the first 6 months. And if you compare that for the last maybe 9-10 years, it's the highest for the last 10 years, for example. And if you look at total capital raised from new issuances, be it debt issues, equity issues, rights issues, private placement, I think as at July, we have raised, the market has facilitated about a 70 billion in capital. That's for the first 6 or 7 months. Whole of last year, the figure was something like 66 billion. So we have surpassed the entirety of last year in just 6 months. So you can see the activation of the primary market that is taking place. And the good news is that there is a pipeline. There are more companies coming. And the companies that have had share issues have all been successful to the extent they have got the full issuance, the subscription, and all of the secondary trading is also taking place above the issued price, which means the investors who invested in the primary issue is already at a capital gain, or they are making a good return on the share already, which will probably encourage more invest in the market in insurances. So that's the third focus area. The other one that I think, Chamar, you did touch on about broad base in the stock market. It's something that we have been wanting to do for a very long time, and I think we got an excellent opportunity now in terms of digitization, where we have been able to expand the market, expand both in terms of the number as well as the geographical spread. I think Naresh shared some interesting statistics with you in terms of number of investors. If you look at active investors, last year we had 21,000. Today it's at about over 40,000 in the first 7 months only. If you look at number of new accounts open, in 2019 we had 10,000. In today we have over 18,000. So it has almost doubled in 2 years. And this is just in 7 months, we have got 18,000 new accounts. And over 95% have been opened digitally. And a good thing that we are seeing, a trend that we are seeing, is that 85% of the accounts that have been opened digitally are below 40 years of age. So we are seeing a younger set of investors coming into the market. Traditionally, a bulk of our local investors were over 50. But today we see a trend that younger investors are joining in the market, and that's probably a very good sign, because then you have a continuity in the investor base that is going. And the other factor is that only 57% of the accounts are from the Western province, which means the market is getting broad-based. And as Naresh said, now you have the ability, wherever you are in Sri Lanka, you can open and come into the market, trade and settle. You don't need to physically even visit a stockbroking office. So that advantage, I think, has allowed us to move away from the brick and mortar branch concept into something more tangible, which has seen the results already. So Chamar, these are the focus areas: broad base in the market, increasing the liquidity, activating the primary market, and of course the product diversification.
Thank you, Rajiv. I mean, these are, sometimes we forget that the first step is, the first couple of steps are sometimes more important than all the steps we take later on. And I think we have done that when it comes to the Colombo Stock Exchange, especially over the last couple of months, those steps have been taken place. And definitely, like I said, the fact that people don't have to come and visit, they can create their own accounts, they can do all the paperwork, they can remotely essentially get up and running to transact. It's a huge step that paves way for a lot of future innovation and future fintech that they will demand. So that's another aspect about the catalysts for fintech. These are catalysts that create further catalysts for fintech. Rajiva, in terms of your kind of plan for the 3 to 5 year, do you see any major hurdles? I'm trying to see if there are any. We're looking at catalysts now. We're looking at technology as an enabler. But for all the other analysts out there who always look at the risks, what do you think are the risks for the adoption of fintech, or getting some of these? I know regulation and some of these the legal aspects take a while. You talk, what are your thoughts about those?
I think, Shamar, I would respond this way. The stock exchange is all about technology. And in a stock exchange, the operations are all centered around pre-trade, trade, and post-trade operations, which are now fully automated, I think, all over the world. So all of its operations are really centered around systems. The more efficient the systems are, the more relevant you are as a market. So I think a critical catalyst of the exchange is for sure technology, and an increasingly digitalized environment. These systems become more and more critical, and the adoption of such newer technologies is paramount, I think. So in a trading environment where loss of access, for example, would mean lost opportunities for stakeholders, these systems become very critical. So you're talking about uptime and 24/7 access. So from our perspective, we have been continually investing in technology, in good times and bad, consistently upgrading. For example, we just replaced our data center to cater to an expanded marketplace because we need to scale up. I shared some figures with you.
Yeah.
How fast we had to scale up. We didn't really have the luxury of time to scale up. And it's not, I mean, I think a lot of you guys are IT professionals. You know it's not that easy to scale up. So we have been talking about upgrading and upgrading our platforms, not only to cater to the volumes, but also to the new products that we spoke of. So we have an IT strategy to answer your question that we are rolling out in tandem with our development plans. In terms of hurdles, I really don't see this as hurdles, but maybe challenges. And some of the challenges we see is how do you keep up with this evolving new technologies? How do you keep up? I mean, how fast can you adopt and deliver? Time to market. For example, classic example is the mobile app, and I think Naresh had some very good insight into that. How fast we didn't have the luxury of time. We had to come up with this before the next lockdown. We were successful in doing it, and now we are building on it. We are improving on it, and we have many more plans to make the user experience much better than what we have, similar to something that Varun was talking about and shared with us earlier. Then the other challenge is how do you scale up so very fast to respond to changing market dynamics? We don't know what's in store next year really. So the other challenge is how do you make this technology investment pay for you? Technology is expensive. And stock exchanges, small stock exchanges like us, we don't build systems. Where Naresh was earlier at MIT and LSE, they build systems, whether it be P-trade, trading, post-trade systems. We need to acquire them. We need to acquire the licenses to operate them. So we build only the supporting infrastructure and the systems. But you need to keep investing. And the question is, how does one recover the cost? So you need to be very fast and agile in that area to make technology really work for you. So that is my real response.
Thank you. Thank you, Rajiv. I think we covered a fair bit of topics here, I mean, from the global perspective to the digitalization, catalysts and the trust, as well as the kind of the big picture reality of where we stand in terms of our capital markets here. I'd like to maybe open the floor to any questions that the audience might have.
Then Samar, if I were to interrupt, there are quite a few questions that have been posted. Maybe.
Yes. Shall we just go through? I think you answered some of them already, Rajiv.
In the name of the app, of course, you put CSE to Play Store or on Apple, you can find the CSE app.
And Naresh, there's one on NFT. I don't know if you want to take that.
Which one?
Whether we have any plans for NFT.
I think the first answer in that one, the first challenge is the wallet, optimizing the wallet where the core of capital raising and distribution is sorted out. And thereafter we can look at it.
The chat box has a bunch of questions as well, I think.
Shaman, there's one on CSE. Can I have a go at that?
Yes, please, Rajiv.
There's one about making available CSE data to international platform like TradingView. So how we do that is we currently sell this data to international data vendors. They in turn give it out to various platforms. So there is no restriction at all in terms of making available data. We make data available, and already there are multiple international data vendors who get the data from us. There are local vendors as well as international vendors. So this information is data, live feeds are available, and we make them available. So I think it's demand driven. If tradingview.com, for example, really wants CSE on board, or the Colombo on board, or Sri Lanka on board, probably they will get that. And I think there are quite a few platforms which track this market, which gets data from us, and then we are one of the markets that are featured on their platform, I think. So maybe we can do some marketing and try to get ourselves onboarded here.
There's a question, I'll take that. Somebody's asking, what have we done to make financial literacy, enable financial literacy? From an SCC and capital market standpoint, subject will be launched on capital markets in, I think, education system revision is coming in 2023. So for grade 6 students, there'll be there'll be a subject on capital markets, investing, all of that, to create that investor mindset, financial literacy, all of that. And apart from that, time in the YouTube channels, and there are various programs that SCC and CSC both do on invest education and financial literacy.
There's another question on KYC information being shared between CSC banks and other kind of entities. Any thoughts on that, Naresh?
Yeah, so this interface literally was built for CSC, right? But then again, I think central bank has opened it up to the banks. So I mean, it's up to them to basically get it on board, because I think we as a capital market was using it from September, right? And obviously we want to build the capital market, and it's up to the banks and the financial institutions to use it.
I think that is it has been opened up to banks now. Banks.
Yeah, it has been.
Yeah. There's another one about whether you can link an already existing account to the app. Yes, it's possible. It's possible to do that, and you have a single sign-in as well after that. So that's possible. Another quick question: billions are now made in CSC. What if the revenue goes to the government? Why can't you introduce reasonable tax to CSC so that the government can make some money?
No, I think, Raju, anyway, there's a cess that goes in. No,
there's a share transaction levy, STL, which is paid on every transaction. And I think it's a fair 0.03% of every transaction. That's a fair amount that goes to the government on every transaction. And it's taxed at source, and the recoverability is 100%. And we send the tax once a week to the government. So the recoverability is very straightforward and simple. Quite apart from that, CSC itself pays the normal corporate taxes on its earnings as well.
There's another question about this multi-exchange hub, about the CHEC, the port city coming in, and the opportunities to kind of connect between those two. I think there was also talk about currency exchanges also being included in CHEC. So any connections or comments there, Rajiv?
Yeah, actually there's some development there. We have actually signed a MOU with the port city already to set up international stock exchange. Of course, the regulatory approvals will have to be obtained both from the SCC as well as the Port City Commission. But we are in the preliminary stages of developing models so that we will have an international partner to set up this exchange. But we will likely be the local partner to set up the international exchange, which will have multiple products and be all dollar-based.
Rajiv, there's one on gold trading. You want to take that? But are we likely to see gold trading on board?
Well, again, very early stages. We are discussing with the banks now to set up a model to introduce a paper product so that as an investor you could buy gold denominated in US dollars. We are going all out to get that product out this year. We are making good progress with some of the banks. Discussions are on, and once we do have a model, then we probably will come to the regulator for formal approval and then roll it out. So in terms of timeline, we are very keen that we do it during the course of this year. Again, if you make data available to famous platforms? Yes, we do. We provide data to Reuters, Bloomberg, all of the leading data vendors. So they do disseminate that information. And Naresh, there's one CSC app still does not user friendly. Direct website is much better. So it's a point we can take on board and see how we can further improve. It's open to this. For sure.
I think user friendly, we've identified it's a journey. I mean, optimizing user friendliness is a journey. And this is the third revision that we've done. And anyway, we've done audit as well on the app to see what are the plus, what works, what doesn't work. And the committee is in the phase of reevaluating, looking at strategies, how we can optimize the app. So it's a continuous journey that.
The data APIs are open to people who want to use it. I mean, I think that Rajiv spoke about that, but I mean,
yeah, even the app has the data APIs, same market data information. You have various packages available on the app alone, right? So you can select the package, pay with your credit card, and you have the data at your fingertips. You can use the same login basically in the site as well.
Yeah. So on the APIs, the systems itself, recently the regulator, the SEC recently approved, in principle, the plan to provide APIs to third-party platform providers. I think we have just done the rules on that and submitted it for formal approval. Once that is done, any third-party platform provider will be able to connect through an API and connect to our system. So that's probably in the works and should see the light of day very soon. And I'm sure there are a couple of platforms who are already interested in that. There's also
any observation. Sorry, go ahead.
Sorry, go ahead. I think I'm sure we'll have.
No, I was wondering if one of the thoughts I had was, I mean, should we be doing something different? I mean, from an outsider's perspective, I mean, I think all of us are looking at this and we speak about this and we can keep on talking about it. But I mean, from outsider's perspective, any sort of observations that you have?
So the key question for API is, how do you define the monetization for that? Because the premise is the financial institutions will incur a cost to offer this infra. And suddenly, if there are, let's say, a small tech company firing 100,000 API calls a day to you, who bears the cost? So I personally have very strong views around the limitations and challenges of European model, where API access is a right, not a privilege. So when it becomes a right, with rights comes responsibilities. And the challenge is in a regulated industry, you need to have enforcements of the responsibilities. It's not just responsibilities, it becomes obligations. And there's a thin line between responsibilities and obligations. So what would be really useful if you could share in terms of what are the obligations? So if, for example, somebody is connecting to the API, what kind of governance do they need to adhere to? Do they need an external controls, governance, audits, certifications? How do they protect the data? If they lose the data, which they get from the querying of API, whose liability is it? Because if it's the liability of the main financial institution, then it's not fair because they have no way to enforce what's happening downstream. So the key part I say is the liability framework around the not so nice cases. My brain goes to what will break of the not so nice cases and who pays for it. Because you see, having an API is one thing, but the question is who pays for it. Once it starts to scale, then somebody got to pay for it, right? If there is a value, then you should pay for that value. And if you are saying there is no value, then there's no need to do it. So which is why I always am an advocate of having a fair play ecosystem between the providers and the seekers of API.
Thank you, Varun.
So on the API,
you were saying,
building out the rules around it precisely as Varun did say. So we're just drawing up the rules as to what the rules would be in terms of what obligations, the responsibility of the broker, because he's the primary agent or the party who is responsible. And for example, does the third party provider connect through brokers? So these are some of the things that are being debated as we work on the rules. Another quick question about OMS, a lot of questions. I don't know whether Chamara, we have time to take.
No, we have time. We have time. Let's go ahead.
OMS and BBO systems hosted on cloud. We are currently looking at this as we speak. There are some regulatory concerns, let's say, rather than restrictions. There's nothing to say that nowhere is it written saying you cannot, but there are concerns, quite rightly, as to taking customer data out and hosting it elsewhere. So we need to build in some safeguards before we do that. But certainly that's on the cards and we're looking at it, because this can have, on one hand, cost efficiencies, probably better security and better access, more robust, better disaster recovery, etc. All of that, and it's more efficient to do it that way. We have moved some of our non-critical data already, but in terms of client data, I think this is something that we may have to work with the regulators to do that.
And also one thing which I will say is, one thing which has worked in other markets is, they have defined that here are the category of intermediaries who are, I would say, slightly larger players who can handle that level of governance and compliance. And the smaller players can sit behind the, I would say, slightly larger players who have some level of institutional access from that perspective. Because sometimes it's not always feasible for a small company to comply with the broker grade compliance. So for example, think of it, if I only want a read-only access, if I only want to see my statement from three different brokers in one place as a read-only, then the regulatory burden on somebody like that, somebody who wants to also do a read and write access to trigger orders. So because the levels of access needs differential level of controls and regulatory oversight.
I think that tiered system of compliance cost essentially is important, where, as you said, there are smaller firms, especially I'm thinking about the startup ecosystem, but that's where some of these newer things, there's a larger fair amount of impetus for fintechs from the startup ecosystems. And if the cost of compliance is too high, you automatically kill some sort of ideas that might come out. But at the same time, you have to have a higher standard of regulation, as Varun said, especially for the institutional names that are using the data out of the exchange. So I think a tiered system of controls yeah. So I think actually we have I think covered a fair amount of the questions, and we've also come to the end of our other question. Different words, different words. Yes.
There are many more, perhaps, Chamar, if you can make these available, I can probably very quickly write some answers down and respond.
Sure.
I think we may have all the time here. Quite a bit of interest, because if you look at the question and answers, there are so many as well, apart from the chat line.
Exactly.
Questions as well. So if you can give this to me.
Definitely, I will do that.
Yeah, we'll see that everything is answered.
Thank you, Rajiv. So I think I'd like to call the session to an end. And I think we had a very interesting session, and judging by the questions and the traffic on the chat window, definitely I think there are more questions. So if there are still questions coming through, keep on typing. What we will do is we will make sure that this kind of comes out back to everybody who joined. And I would like to thank the three of you for giving an excellent session, Varun, Naresh, and Rajiv. It's been an interesting, fun conversation for me personally, and I hope we can do another session like this soon and talk about the new innovations that have come through. Aruna, anything that you want to mention? Anything else? Any closing remarks you want to make?
Not really, Chamara. I think once again, I would like to thank all the speakers and all our partners and all the participants attending for this insightful discussion. And thank you very much, everyone.
Thanks a lot, everybody.
Thank you for having us.
Thank you.
Thank you. Bye-bye.
Bye. Thank you.